All right, now I see it time and time again that we need high volume for AMC stock. If we want to see the squeeze, we need high volume. Guys, we're having high volume, and yes, it's resulting in higher prices. I know on Thursday we watched the price run from roughly $30 all the way to $40, and we had 200 million shares that traded hands on Thursday. Well, look, I'm here to say that high volume could result in higher prices. It's not guaranteed that high volume equals high prices, but we want low volume for AMC stock during the short squeeze. So let's talk about one, why low volume could potentially trigger the squeeze, and two, why regardless of that triggering or the price triggering or whatever triggering, why we want low volume during the squeeze. So of course, if this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. AMC stock, man, it's been on a good run over the last, day or so right now. I know the beginning of the week was rough, but we had a very nice run on Thursday, and the volume is rising again. So I've been seeing a lot of questions in the live streams about, well, you say you want low volume. Why would you want low volume if high volume means high prices? Well, guys, first and foremost, and we've talked about it, if you've seen any of the videos by now, you know that high volume is more of a correlation with high momentum or stronger swings or whatever. It doesn't necessarily directly correlate to the price, meaning high volume, high price. You could have high volume, low price as well. So let's talk about why I believe a low volume could potentially trigger the AMC stock short squeeze. So there's a couple different ways you can look at risks for lenders and hedge funds and the people that we're trying to trigger these margin calls on, right? So a high price is a risk because it means that the hedge funds and these short sellers are making less money. And they need to have money on hand if they're going to be able to afford to not get margin called. They need to have a lot of money. So the higher the price, the less money the short sellers have. That's one way of looking at a risk. But another risk is called days to cover. And days to cover means if the volume is very low, if you're looking at the average daily volume for AMC stock, it's going to take longer for the short positions to cover that, okay? And you say, well, we've had some days that were pretty low volume. 60 million shares is pretty low on AMC. 60 million shares is not low on AMC because it's going to take so much more than that to get down. The risk starts around 8 days to cover. Now, if we know there are roughly 75 million shares outstanding, million short shares outstanding for AMC rather, if we know there's 75 million short shares outstanding, that means we have to get down into the 8 million to 10 million shares a day range before that even becomes a risk to the short sellers and the hedge funds. So when I say low volume, guys, I'm talking 1 million shares a day, maybe 5 million shares. I want to see volume as low as possible. That is going to create a risk for the hedge funds, and it would be beautiful. Ideal scenario is a very high price and very low volume. That is an ideal scenario to trigger a margin call and to get this thing rolling. Now, whether or not let's just say the price goes up and we watch AMC, the margin call is triggered because of the high price. So we don't, maybe we got huge volume going in there. Why would I want to see low volume during the short squeeze? A couple of reasons as well. If you've got low volume during the short squeeze, it means that the duration is going to be played out over a longer period of time. We're not going to see the hedge funds cover in one day if they can only get their hands on 1 million shares or 3 million shares or 5 million shares. If they get margin called and they can only scoop up 7 million shares a day, the short squeeze at the slowest, at the least, would take at least 7 days to take place. And when I say it's going to take 7 days to take place, guys, we are going to see some crazy prices for 7 days. right? It's going to be a beautiful slow motion move that is just going to, if you thought today's run was beautiful, it is going to be exponentially better than that if we can keep the volume low during the short squeeze. What else does it mean? It means that if we are willing to hold the stock and we don't sell it back to the hedge funds, the price squeezes even higher. Okay? If we don't sell it back, volume stays low. That's when they continue to offer higher and higher and higher prices. It doesn't have to take place over a couple hours to jump up. If the next order comes in that we're willing to take, let's say the short squeeze happened tomorrow, right? Margin calls happen tomorrow. If nobody was willing to sell their stock for $40, guess what? Goes up to the next. If nobody's willing to sell it at 41, the next level that gets triggered is the next level that somebody's willing to sell at. So if the next sell order is at 100, you're going to watch the stock price go from 40 to 100 because that's the next level that somebody is willing to take that stock at. So knowing that, we don't need the high volume and it's going to drag out the short squeeze even longer. But look, here's why high volume would be the enemy, at least during the short squeeze. You have to agree on that one. Because if we have high volume, and I know a lot of people want high volume to trigger the squeeze, and high volume to drive the price up that triggers the squeeze, and I guess I can get on board with you. I don't think it's going to be as good if that's the thing, because how are you going to go from high volume to low volume? But let's talk about why I don't want to see high volume during the short squeeze. So right now, we know that hedge funds have to cover 75 million shares. You might be on the team that thinks there's a billion shares out there, billion naked shorts or whatever. I'm not on that team, okay, guys? You know that by now, whatever. We know that they do have to cover 75 million. So let's say that AMC is trading 200 million, 300 million, 500 million shares a day, and all of a sudden they have to go out, they get margin called, and they need to cover, in best case scenario, they need to cover all 75 million shares in the same day, okay? Think about that. If we can watch 200 million shares be traded on Thursday and the price goes up roughly 15-20%, right? Whatever it was from 30 to 38 or whatever we said, 36 was the close and then run up to like 38 after hours or whatever. So if we did that on 200 million and say we're averaging 500 million shares a day, how much higher, how much do you really think the price is going to squeeze if we only have an influx of 75 million buy orders coming in? If we only need to trade hands 75 million times on 500 million shares, 75 million is not a drastic increase in volume, okay? And yeah, there's going to be people who say, well, the volume now is just naked shorting because nobody's, guys, people are selling this stock. It's not just naked shorting. The stock is trading hands, okay? It is. You have to accept that at this point. But an inflow of 75 million when the average volume is 500 million is not a lot. So that it would dilute the actual squeeze part into not giving us the prices we need. So that's why we need to concentrate the supply. We need to withhold the supply. We do not need to supply the hedge funds with these shares. And think about it for just one moment. If average volume is 1 million and all of a sudden you have 75 million buy orders come in, that is a huge squeeze in demand. And if we're still unwilling to sell those shares back, and we still only sell them 1 million, maybe 5 million shares a day at that point, guys, that price is going to squeeze beyond the prices that we would even hope to see at the current state of things. So hopefully this clears it up a little more. I know I get the question a lot during the live streams, and I feel like I could do a better job of at least expressing my opinion and my beliefs on why I would like to see low volume. So hopefully this does. Hopefully it clears it up a little bit. If you still have questions, ask them in the chat ask them in the comments if you want to right now. Definitely stop by a live stream, ask there. Hopefully I can maybe answer it in a different way or a different light that might make sense to somebody and might make things a little clearer. See this button right here? If it's red, make sure to click that subscribe button. Join us, become a bro. We are here every single day, and we are growing our portfolios together. Guys, Webull, all month long, $5 is all you have to deposit, so make sure to deposit $5 in Webull. Use the link down there in the description, and you're going to get a couple free stocks. If you wait until August, you're going to have to deposit $100, so you might as well do it now if you want. Get a little discount on the deposit there, and still get some good stocks just for doing so. What else we got? Twitter. We got Twitter if you want to follow me there, ClayBro883, and just look at all the links in the description, right? They're there for a reason, so check them all out. And I'm pretty sure that sums it up, guys. So until the next time, I hope that each and every one of you have an awesome day.